What's up, everybody? It's a bit here. Welcome to this week's Global Capital Market Recap for the weekend in August 20th, 2010. Special show for you guys since we're back and back for in a big way. And we are now, getting bigger, putting some more information out for you guys, some more content. So hopefully you guys can be on the right side of the trade and have some good old institutional side perspective. First thing you'll notice is that here's me. Here's a bid hitter. So, you can check out how good I look. But that's beside the point. First thing is I want to give a big thank you to everyone who's participating in the chat room. The chat room is only successful because of the people that are in there, and I'm very impressed with the quality of people that are in there and how they trade, the information that they're bringing to the table, and the utility of the chat room. I'm going to stop updating Twitter with the cash and pit sentiments, and the reason being is because Twitter really sucks. It's not available when I need it to be available, and I'm not able to update stuff as quickly as I'd like. They've got ratios and how much information you can put out there. Multiple eyes are always better than one set of eyes, so we're able to cover a lot more ground in the chat room, and also able to make, do better and see a lot more stuff and react a lot quicker than what we would be able to otherwise if we're just limited to Twitter. So we're gonna get rid of Twitter. Chat room's awesome. Thank you guys. Big thank you for coming out and participating and making the chat room as good as what it is. Also, the message board, the permissions on there have been changed now. I didn't know that they were broken, but anybody can now view the message board. And the reason why that's important now is because what I'm going to do is start to put supplemental content for these pre-market, or not pre-market, but the capital market recaps in there so that you can look at charts and see some things in more detail and kind of work through everything on your own over the weekend so you're not stuck into just watching me do this video. I've always got charts going in there throughout the week. I'll post some additional stuff, and we'll keep going like that. For those of you who are not signed up for the pre-market summary, you absolutely need to be signed up for the pre-market summary because it's your only gauge as far as what's taking place in a concise, easy-to-read, understand manner, and you can visually see what's happening. The only place I know that exists that covers all this stuff, and it's very important to do so because the U.S. markets do not move on their own anymore. They're very dependent on what's taking place in Europe and over in Asia, so by having the pre-market summary every morning before the cash market opens, you're able to take a look and see exactly what the overnight bias is, whether it's risk-seeking, risk-adverse, or mixed, so you have an idea coming into the open what's taking place. Obviously, once everything opens up, all bets are off. However, if you can establish some type of a bias coming in, you're that much better than everybody else who has no clue what they're even doing, which is basically everybody that's out there, which is fine, but that's why we're here, because we're better than them. In addition to that, so sign up. It doesn't cost you anything at all. There's a link in the top right of the page. Click that, put your email address in there, and you'll get it every single week. Also, if you scroll down on that page, you're going to see samples as far as what that looks like, so you have an idea as far as what's coming your way. What other things? I gotta check my board here. I think that's about it. What we'll do is we'll just recap what we talked about last week. Last week we pointed out that the S&P was catching a bid in through this area right here, which it certainly was. The reason why we know that it was because price eventually increased. I also talked about how it would be fantastic if we saw a flush to catch some stops before volume came back in and pushed price higher, which is exactly, again, what took place. There's kind of a pattern to all this stuff as far as how things work, and this is kind of how things work. What's important to note, though, is that we've hit this line of resistance at 1100 even. We weren't able to break through that. Both days it was sold into fairly heavily. Now the price is discounted. It's important to note that it's discounted in high volume, which means that the institutional side is coming back in, and they are taking the opposite side of the trade. We know that because we had another flush today. In the morning, the institutional side was trying to defend the 66.5 area in the mini, which was the previous low established earlier in the week, somewhere between Monday and Thursday. I'm not quite sure which day it was, but that's where the low was. The paper side, institutional side was trying to defend that. Wasn't able to make that happen, but did their best. Price eventually declined, hit S1, the pivot S1 I'm talking about. Hit that perfectly, and then we had a rally come in, which is awesome because what we did is we flushed out again. We flushed below that range, and volume came back through on the buy side. Now, is there a lot of volume coming back through on the buy side? There isn't right now. However, it's enough to put us back inside that range. So going forward into Monday, it's important to note that there is still demand in the market at these levels, and there is certainly an opportunity for price to increase from here. Whether that's going to happen Monday right away or not, we won't know until the volume actually comes through. but it is good to know that there is volume and there is demand coming back in on the buy side, pushing price higher. If we take a look at the S&P over the weekly time frame, here's just some fibs on it. It's good to know that the volume is increasing on this move downward on the weekly time frame. We closed lower than what we were last week. So that means that there's still, overall, a longer period of time, supply coming through, and it's on the increase. You know, certainly it provides a situation where we can go lower if more supply comes through and demand shores up, but we won't know until we actually get there. The fibs, everyone's going to be looking at like that 995 area. So whether that line is ingrained in stone, whether that's going to be a valid line or not, line of support, you won't know until you see the volume come back through and try to defend that area. However, it is good to note that everybody else is going to be looking at that line because it's right there. So expect what they're what they're looking for. To give you an idea as far as a heads up, here's eighths, quarters, thirds, 1/2 broken down and segmented since July of 2009 when the last current leg started. You can see that we are still completely consolidated since May in a very relatively tight range. Also, we are not below the 50% retrace level on there either, which actually still makes conditions set up enough so that we can move higher from here. Will that happen? We don't know. We have to see that volume come through, but it's also important to note that that potential, call it activity, event, is there. We'll take a look at the euro-dollar currency. Euro-dollar currency, we talked about how there were some buyers starting to come through as well, but the euro is pretty cool right here because what's taking place, if you look, if you go back in history, this move up took place on extremely high volume, over relatively high volume compared to everything else, and it was pushed. The price was pushed down off the high, which means that supply is starting to enter the market. The day after, that's a more interesting volume bar because there's no volume whatsoever, and price fell all the way down and closed on its lows. That means that there's no more demand coming through, and it's being replaced by supply, which is why you have a discount in price. Subsequently, we saw an increase in volume on the sell side, and we saw that price discount continue. We also saw that shore up. The volume shored up down here. What that means when volume shores up, once price has been marked down, is that supply is diminished and it's going to be replaced by demand, which is why we had this slight bounce. Now, if you take a look back on your 60-minute chart, which I'll certainly post, and let me write that down so that I remember to put that on the bulletin board for you, you'll see a clear line of resistance. So the institutional side was defending the 29 even area on the sell side, which they were for several days and probably about a week or so. Thursday we had a really nice decline off that level. It was perfect textbook sell-off, and size coming through and did a great job defending that level again. So that's a good time to get short that and at least cover up at the bottom of the range. Today we broke through the bottom of that range just barely, but we're knocking on the door as far as that line of prior support. So generally prior support acts as resistance, but that can or can also not happen. It just depends on what's taking place with the volume coming through again. However, if that is the case, the new range that we're going to be at is between like 27.25, 27.50 area down to the bottom over here, 25 even, call it. So you'll see that confirm and set up on the 60-minute, 30-minute, and every other time frame, and also the daily. So that's what's taking place over there. Let's take a look at the yen because some people are asking about the yen. Blow this back so you can see what's happening. We're at historical line of markup here in price, and it's important to note that on these days it's being sold into. There's several days where it's very clear to see the selling come through. We're seeing some of that happen on high volume. We're seeing some of that happen, the tests happen on low volume, which means that there's supply coming through and there's weak demand once it gets marked up. So that's why we're having diminishing prices. And we're seeing this constant downward pressure. There's 3 very clear days that this is taking place. That's the first day. That's the second day. Here's another high volume day right there. Ran out. Volume ran out completely here, which is replaced by demand, which is why we had an increase in price. We take a look at Thursday. High volume again. Prices come down. They defended that upper level again. So it does not, it's only irrational at this point to have at least some short yen exposure until something else happens where either we get another blowout volume day to the upside or whatever, but there's no reason not to take that trade. I'm not advocating that you take any trade whatsoever, but that's what we're seeing right now in the daily time frame for the yen. Take a look at crude oil. High line time, fairly okay. Crude oil, we talked about some demand coming back in, but it was very weak. Last week we talked about that. We got our price increase and it sold off. You know, I got rocked on whatever day it was. I was making fun of Dennis Gartman because he put it short on this day, which was the 18th. And we had a giant rally in the afternoon. But the important thing is that that rally took place on very low volumes. That means that the demand that came through is not enough to overcome the supply. It's just not enough, which is why we had a continuation of downward price movements and discounting take place. However, these declines in prices are now taking place on very low volume compared to where we've come from. So that means that the supply coming through is actually starting to weaken. And once supply gets weak enough, it's replaced with demand. Now, hang on 2 seconds. Sorry. So, I would be expecting some type of a rally at some point. It's not set up enough to make a bottom here. You're going to have to wait and confirm the volume as it comes through next week when that takes place in order to start to get long there. So, that's all I'm going to do for this week. I'm going to try to keep this pretty short and sweet. Here, I can look at this. So all of our friends on YouTube have something good to, you know, watch without going to 2 different videos. I'm going to post some supplemental material too on the bulletin, on the message board on there. If you guys aren't set up already and subscribed, it's free. And for the pre-market summary, you should do that. There's no reason not to have an overnight session bias before you come into the cash market. You have to be aware of what's taking place on a macroeconomic level so that you know what the dominant themes will be for the day. So go ahead and sign up for that. Join us in chat next week. Chat keeps getting better and better. We're slowly picking up a lot of people coming through, and a lot of really good people too. We don't trade stocks in the chat room. There's no talk of stocks whatsoever. We don't do that. All we do is we trade primarily futures. Doesn't matter what the market is. If you're trading commodities, index futures, currency futures, doesn't make any difference. I'm not an options guy, but if you guys want to talk about options, that's totally cool with me. But so far, everyone in there has been wonderful, and that chat room is only good because of the quality of people that we've got in there. And that's the whole entire idea behind BIDHITTER, because this is no bullshit. This is the straight truth coming from the institutional side, how you guys can read this and figure out what's going on. I haven't watched the news in months. I couldn't tell you what's taking place, but I can tell you what's taking place with the price and volume as it comes through to figure out what the institutional side's doing. I heard some rumors of a Hindenburg omen or something like that. I don't even really know what that is. I looked it up, and it looks like a lot of crap that I've got to weed through to figure out what it means. But I don't know, price and volume, that's the only thing that you really need to look at. So anyway, guys, have any questions, send me an email, info@bidhitter.com. Hope you guys have a great week. Thanks for making the chat room awesome. I'll get some more supplemental information coming out to you on the message board to go along with this video. I'm also going to post some trading rules, too, on some key things, some key topics that I think are very important for you to pay attention to while you're trading. And it doesn't need to be a lot of rules, it just needs to be enough to keep you out of trouble. Less is actually more. It's why the only thing I look at is price and volume and the relationship of price to volume. That's it. Nothing else. It's all that you need. Not saying you're going to get rich, but I'm saying you're going to have a much, much better chance by doing that and actually reading price action versus relying on some indicators and squiggly lines and shit like that. So, anyway, I hope you guys have a great week. I'll see you next week.